What is up, guys? It is Dan the Trading Man. Another video here. I did say earlier on Twitter I'd make a video going over the recent action in the markets because there has been a lot actually, and something that I was hoping to see and kind of anticipated, which is great to finally come to terms here. So the S&P 500 finally, we got that move out of this range that we've had for a little over a month, I think, or about a month or so. I was hoping, I said in the previous video that we should break out of this soon. It's been so long, just back and forth. And finally today, we get that move higher. You can see here, breaking above, getting this full candle close above this prior level that was acting as resistance. Again, these levels came from gap, from big gap days, right? So if we go to an hourly chart here, and actually this chart does not show, or it does show extended hours, so you're not going to see any gaps here. But basically, if I were to take away the extended hours, then we would be left with all these gaps, right? And so that is why, if we go to a 90-day hour chart, in this area, that's why we kept hitting this area and falling every single time. And so this is why, as I was saying in the previous video, we kept hitting this area, falling down. We would get lower and bounce back up. And so finally getting this move higher. And I think I pointed this out in the previous video. I'll go over it again, though, as to why I thought maybe we would have this, this breakout here. And that was simply because we had a nice Fibonacci level. There was a 50% level. And it kind of lined up with our gap fill, or our unfilled gap in this area as well at the time. So we had a low to high, go to its target, and all you would do is just look for that next low to high. 50% gets hit, and also this level that signified an unfilled gap was also hit, and we ended up moving higher into these targets, and you can see we're starting to even build these higher highs, higher lows. Now a higher high and a higher low here. We'll see if we get the next higher high going above this high of 29.86 half. That would be really key here to keep this move going. And again, I'm very excited to see this finally happen. Unfortunately, we're coming into the weekend, so only get it for a couple days, and then we'll be back in action the following week. But we should see some good trading after this, due to the fact that we're finally breaking out, getting more into some free range here instead of being range bound. Going into oil, I said in the beginning of the week, we do see this resistance in this area. We fall lower, it happens. But what we have seen, similar to the S&P, was that range-bound market, that back and forth play. And so that's basically what has been happening here as well. We had, August, we go down. The next week we're up. And we've just kind of been stuck in this range here. If I mark this area, you can see that we've had this high from the 13th to even yesterday. We got above it, but then we couldn't close above it. We ended up falling back down. And then we also, we're getting down to these lows here, and we keep bouncing higher in this tiny little range here. And we have this high from the 50%, and then this low that actually, I believe, maybe it's not. I thought it was lower than this low, but this low is 50.60. This low is 50.52. Just to double check, 50.60, 50.72. Okay, and this low is 50.52. So this low is lower, and we made that new low, and then we'll see if we end up actually taking out this prior these highs up here. But it is interesting that another market that's just range bound right now. Also in oil, the volume hasn't been as heavy. On the tick chart, you can notice that when I'm day trading, that there's less trades taking place, less volume taking place, and not as many setups overall. Today there was a setup. I can go over that. Let me go to an hourly chart first just to kind of see what's going on there, and then we'll dive into it. And you can see this chart's playing as I drew up here on the range, bouncing up and down, up and down. And so you might think that, okay, we're going to fall back to this side now. We'll see what happens. Just like the S&P, I do want to see this break out to one way. In the beginning of the summer, I'll pull up the daily chart one more time. Sorry, guys. Over the summer, there were some really nice trades because you can see that we were just like, breaking down for a few days, little pullback, break down some more days, build this this foundation down here, and then move back up higher. And that was just really good trading. I remember taking trades in that area, and it was just clean. very nice retracements on Fibonacci to enter and exit. Very good market. This has been more choppy and harder to find entries. So notice how I said harder to find entries. You can still find entries, they're just harder to find and they're less likely to occur when the markets are like this. Now let's go to a tick chart here. We can go to the week to date, the 987. And today I actually was looking for a high to low setup. That would be over here. And I was looking for this high to low, and you can see 57.47 was my entry, and what to be hit, the high of 57.46. So I was front run by a tick, meaning that this did not hit my 50% level. It did not fill me in the trade. I missed it by a tick. I missed it by 1 cent. And then we, of course, ran down to our targets. So it's nice to see that it, in a way, had the right idea, just didn't get filled here. 1 cent away, didn't fill me, and we moved down to the targets. And as you can see, we kept falling and still down there. And we'll see if we can move higher tomorrow or how the market plays this. But again, notice how we had this range, right? And we ended up breaking above that, but we did finish below it, which isn't the best sign. You can see here, bouncing, bouncing, bouncing. And then, today for a little bit, oh wow, we're actually breaking above. And then, ooh, started to fall back down. So that was partially why I was trying to find a short setup. We were at highs on the day, meaning that I had less risk, more reward if we were to fall back down. Also looking at this chart, you have, this type of resistance area that could bring us lower. So that was the reasoning behind taking that tick chart trade. One more time here, at highs, buy resistance. I thought this would be a good idea, and like I said, this was not filled here. 47 was the 50%. We got to 46. We were 1 cent away. All right, and I do plan on, like I said in the last video, having more premium content going over why do I take these trades, what do I specifically look for, and having more videos going over my day trades. I think that'll be very beneficial for everybody, even myself, to go back on and review and see how I've developed as a trader. Going to gold here, I have a couple levels marked that I'm expecting us to kind of move higher from, and that would be 15.23.50. I expect us to move higher from. And if not, I expect to move higher from 15.10.30s. If we end up going below 1500s here, then we are very much so at risk of running back down into the 1400s, even the higher 1300s. So it's very ideal for gold if you're an investor or someone who's bullish on this. You do want to see gold higher from these levels. Otherwise, we probably will strike back down. Drastically, it's possible that we could retest this prior resistance level that we finally broke out of. Again, I know I show this every time. Everybody's probably sick of it, but it is astonishing how we've finally broken out of this range and exploded out of the range. And so that is why these levels are important to go higher from. Otherwise, we could really pull back here. A low to high setup from this area puts us right near this area. This 50% level puts us right near this prior resistance. And so it's very possible that if these levels don't hold, we fall back down into the 1360s. And so that is all I got for this video. Shorter video, just going over what I've seen recently, what I expect to see and anticipate. I hope this helps. As always, if you have questions or comments, let me know. You can find me on Twitter at Dan the Trade Man, and I'll see you guys next time.